global economic policies affect local businesses? Introduction. In an increasingly interconnected world, global economic policies have a far-reaching impact on businesses, both large and small, across the globe. These policies, shaped by international organizations, governments, and central banks, influence global markets, trade agreements, financial flows, and regulatory standards. While local businesses primarily operate within their specific regions or nations, they are not immune to the broader trends and decisions that stem from international economic policies. This article will explore how global economic policies affect local businesses, the challenges and opportunities they create, and the strategies businesses can adopt to navigate this complex and ever-evolving environment. Understanding global economic policies. Global economic policies refer to the rules, regulations, and initiatives adopted by international bodies and governments to govern international trade, finance, and markets. These policies are influenced by economic theories, political ideologies, and international negotiations. Key global economic institutions include the International Monetary Fund, which sets policies for global financial stability, the World Trade Organization, which facilitates international trade agreements and enforces trade regulations, the World Bank, which offers financial and technical assistance to developing countries, central banks of major economies such as the US Federal Reserve or the European Central Bank, which set monetary policies that impact global interest rates, inflation, and currency exchange rates. These global economic policies directly or indirectly affect local businesses by shaping the environment in which they operate. The impact of trade policies. One of the most significant ways that global economic policies affect local businesses is through trade policies, including tariffs, import or export regulations, and trade agreements. These policies dictate the terms under which goods and services are exchanged between countries and can either create new opportunities or introduce barriers for local businesses. Tariffs and trade barriers. When a country imposes tariffs, taxes on imports, it can increase the cost of foreign goods, making them less competitive against locally produced goods. For example, a local business that imports materials for production may face higher costs due to increased tariffs, reducing its profitability. Trade agreements. Conversely, trade agreements between countries such as the North American Free Trade Agreement or the European Union Single Market can provide local businesses with greater access to foreign markets, reduce tariffs, and encourage exports. Global supply chains. Many businesses rely on global supply chains for raw materials, components, and finished products. Changes in global trade policies can disrupt these supply chains, leading to delays, increased costs, and shortages of essential goods. Local businesses must stay informed about international trade agreements and government policies to adjust their strategies accordingly and maintain competitive advantage. Exchange rates and currency fluctuations. Currency exchange rates, which are heavily influenced by global economic policies, have a direct impact on businesses that engage in international trade. Fluctuations in exchange rates can affect the cost of importing goods, the price competitiveness of exported goods, and even the profitability of multinational operations. Impact on exports. A local business that exports products to other countries may benefit from a favorable exchange rate if its currency depreciates against foreign currencies, making its goods cheaper for foreign consumers. On the other hand, a strong domestic currency may make exported goods more expensive, potentially reducing demand. Impact on imports. When a local business imports goods or raw materials from other countries, currency fluctuations can either increase or decrease the cost of those imports. For example, if the domestic currency weakens, the business will need to spend more to purchase the same amount of foreign goods, raising its production costs. To mitigate the risk associated with currency fluctuations, businesses may use hedging strategies or diversify their sources of supply and customers. Monetary policies and interest rates. Global economic policies set by central banks, particularly monetary policies, influence interest rates, which in turn impact local businesses. Central banks adjust interest rates to manage inflation, stabilize currencies, and stimulate or slow down economic growth. These decisions have wide-ranging effects on local businesses. Cost of borrowing. When central banks increase interest rates, borrowing becomes more expensive for businesses. For local businesses looking to expand or invest in new projects, higher interest rates mean higher costs for loans and financing. Conversely, when interest rates are low, businesses can borrow at a lower cost, encouraging investment and expansion. Consumer spending. Changes in interest rates can also affect consumer behavior. Higher interest rates can lead to reduced consumer spending as loans and mortgages become more expensive, reducing demand for goods and services. Local businesses that rely on consumer spending must account for these shifts in their pricing and marketing strategies. Local businesses must remain agile to changes in global monetary policies as they influence the overall economic environment, consumer behavior, and access to capital. Inflation and global economic policies. Inflation, which is influenced by global economic policies, can have a significant impact on local businesses. When inflation rises, the cost of goods and services increases, which can reduce consumer purchasing power and squeeze business profit margin. Cost of inputs. Rising inflation can lead to higher input costs for local businesses, including raw materials, energy, and labor. If a business cannot pass these increased costs onto consumers, it may experience reduced profitability. Reduced consumer demand. High inflation typically leads to reduced consumer demand, as individuals may prioritize essential goods and services over non-essential purchases. Local businesses must adjust their pricing strategies and product offerings to accommodate changing consumer behavior. Supply chain disruptions. Inflation often results in supply chain disruptions as businesses face higher transportation and raw material costs. Global economic policies that influence inflationary pressures can cause ripple effects, making it more challenging for local businesses to maintain stable operations. Local businesses need to be prepared to adjust their pricing and operational strategies to mitigate the effects of inflation on their bottom lines. Impact of global financial crises. Global financial crises, which are often the result of systemic issues or poor economic policies, can have a profound impact on local businesses. During financial crises, global economic policies tend to shift in response to market instability, and businesses face a turbulent economic environment. Decreased consumer confidence. During financial crises, consumer confidence often plummets, leading to reduced demand for products and services. This reduction in demand can severely affect local businesses, particularly those in discretionary sectors such as retail or hospitality. Disrupted access to credit. Financial crises often result in tighter credit markets, making it more difficult for local businesses to access loans or financing. This limits their ability to invest, expand, or cover operational costs. Supply chain distortions. A financial crisis can disrupt international trade and supply chains, affecting the availability of raw materials and finished goods. Local businesses that rely on global supply chains may find themselves facing delays, shortages, and increased costs. By monitoring global financial conditions and preparing for potential economic downturns, local businesses can take proactive steps to minimize the impact of a global crisis. Environmental policies and regulations. Global economic policies addressing environmental sustainability, such as those aimed at combating climate change, can have a substantial impact on local businesses. International agreements like the Paris Agreement on Climate Change set the framework for national policies on emissions reductions, energy use, and resource conservation. Green technologies and sustainable practices. Businesses that adapt to sustainable practices or invest in green technologies may benefit from incentives and subsidies provided by governments in line with global environmental policies. However, businesses that fail to comply with new regulations may face fines or increased operational costs. Supply chain adjustments. Global environmental regulations can lead to changes in the cost and availability of raw materials. For example, increased regulation on mining or logging can affect the supply of certain resources, making them more expensive or harder to obtain. Local businesses must stay informed about global environmental policies to ensure compliance and identify opportunities for innovation and growth in the green economy. Global labor standards and social policies. Global economic policies often include initiatives related to labor standards, human rights, and social welfare. These policies can directly affect local businesses, particularly those involved in international trade or operating in countries with stringent labor regulations. Fair labor practices. Many businesses are now required to comply with international labor standards, ensuring fair wages, safe working conditions, and respect for workers' rights. These standards can increase operational costs for local businesses that rely on low-cost labor. Corporate social responsibility. With growing pressure from consumers and international stakeholders, businesses must align their practices with global social and ethical standards. This may involve implementing more sustainable sourcing practices, ensuring transparency in labor conditions, and addressing issues such as income inequality. By embracing global labor standards, businesses can improve their reputation and meet the expectations of socially conscious consumers. Digital transformation and global economic policies. Global economic policies are increasingly shaping the digital transformation of businesses. Policies related to data privacy, cybersecurity, and the digital economy are all part of the broader framework that businesses must navigate in order to remain competitive. Data privacy regulations. Policies like the European Union's General Data Protection Regulation have set strict standards for how businesses handle consumer data. Non-compliance can lead to significant penalties, making it essential for local businesses to adopt robust data protection measures. Cybersecurity standards. As businesses become more reliant on digital platforms, global economic policies related to cybersecurity help protect both companies and consumers from data breaches and cyber attacks. Businesses must adapt to evolving standards to safeguard their operations and consumer trust. Businesses must prioritize digital transformation and invest in technology infrastructure to remain competitive in a globally connected economy. Global tax policies. Global economy policies also include tax regulations that affect international business operations. The tax policies set by governments and international bodies influence the profitability of local businesses operating globally or engaging in cross-border trade. International taxation. Local businesses that operate in multiple countries may be subject to varying tax laws and regulations. Global tax policies, such as the OECD's efforts to tackle tax avoidance by multinational corporations, can impact business decisions about where to invest or set up operations. Corporate tax rates. Changes in corporate tax rates in major economies like the United States or the European Union can influence where businesses decide to establish their headquarters or manufacturing bases. Local businesses must stay informed about changes in global tax policies to optimize their tax strategies and ensure compliance. Global technology standards and intellectual property. As technology continues to advance at a rapid rate, global economic policies related to intellectual property rights and technology standards influence local businesses' ability to innovate and protect their inventions. Intellectual property protection. Global IP agreements, such as the Agreement on Trade-Related Aspects of Intellectual Property Rights, set the rules for how businesses can protect patents, trademarks, and copyrights. This impacts how businesses protect their innovations in global markets. Global technology standards. International agreements on technology standards can affect the way local businesses develop products, particularly in industries like electronics, telecommunications, and automotive. Compliance with global standards ensures that products can be sold and used internationally. Local businesses must understand and comply with global IP and technology standards to safeguard their intellectual property and avoid infringement. Geopolitical influences on economic policies. Geopolitical tensions and diplomatic relations between countries can have a significant impact on global economic policies. Economic sanctions, trade wars, and shifting alliances can all influence local businesses that are part of international supply chains. Sanctions and trade wars. When countries impose sanctions or engage in trade wars, local businesses may face disruptions in their ability to trade or access markets. For example, sanctions against a country can prevent businesses from exporting goods to that market, reducing potential revenue streams. Political instability. Geopolitical instability, such as civil unrest or political transitions, can disrupt supply chains and lead to uncertainty in global markets. Local businesses with exposure to volatile regimes may need to reassess their risk management strategies. Understanding geopolitical dynamics is crucial for local businesses to anticipate potential disruptions and adapt their strategies to safeguard their operations. The future of global economic policies. As the world continues to evolve, global economic policies will increasingly focus on issues like sustainability, digitalization, and equity. The future of global economic policies will shape the business environment for years to come, requiring local businesses to remain flexible and adaptable. Sustainability goals. International efforts to address climate change and sustainability will lead to more stringent regulations on carbon emissions, resource use, and waste management. Local businesses will need to adopt environmentally friendly practices to comply with global standards. Digital economy. The rise of digital currencies, e-commerce, and blockchain technology will continue to impact global economic policies. Local businesses will need to embrace these innovations to remain competitive. By anticipating the direction of global economic policies, local businesses can position themselves for long-term success. Conclusion. Global economic policies have far-reaching implications for local businesses. Trade agreements, monetary policies, currency fluctuations, and other factors all contribute to a complex global environment that businesses must navigate. While these policies create opportunities for growth and expansion, they also introduce challenges such as increased competition, regulatory compliance, and geopolitical risks. To succeed in this dynamic landscape, local businesses must stay informed, be agile in their decision making, and adopt strategies that allow them to capitalize on the opportunities created by global economic policies while mitigating potential risks.